welcome. You're watching Money 9. I'm Sakshi Batra, and on this show, we discuss all about markets, the entire action of the week to help you understand what really moved the markets and what are the triggers the markets will be reacting going forward into the next week, the trading strategies that you should adopt on the indices or on specific stocks. All of this will be discussed with a very special guest joining in. Mr. Lovely Sharma joins in from Finversify on this edition of Bazaar Weekly. Mr. Sharma, thank you so much for taking out time for us on Money Nine. It's great to have you with us to help us understand, how the markets are going to be moving ahead in the next week. First up, let me just bring up all the closing levels of the major indices, the Sensex, the Nifty, and also the broader market indices. Of course, we've had another positive week of close, whether it is the benchmarks or the broader market indices. So let me just first take your view also as to what were the key highlights for the markets and the trading action for this entire week, and what's the outlook that you have?
Hi, good evening, Sakshi. I guess, yes, it has been quite a ride last week, especially when there were certain news that were coming from the global market, as well as we had MPC meeting underway. So market has seen some contraction and expansion, but the point is it remains near its all-time high. So I believe there is a broader range here which is playing out. Market is not able to breach its all-time high, like somewhere it is around 17,900 or 17,850. That's where the level stands. Because there are certain divergences that are also playing out. You got most of the broader sector indices that has seen a decent run up in past few weeks or months, I
Hmm.
would say. And there is now a consolidation phase, so there is a
Sure.
lot of sector rotation that is going. We are seeing some sectors that are going into consolidation, and some of the sectors are coming into with some fresh money. So I believe going forward, we cannot call this a situation where we can call a panic or a top, given the various variables which are in play. But I still believe that it's a buy on dips market. Any dips towards 17,600, 17,450 is a very strong support. On the other hand, I'm seeing Bank Nifty, which is still underperforming and in a broader range, but I still believe that index is in an upside and it's a buy on dips market.
Okay, it's a buy on dips market, both on the Nifty and the Nifty Bank, poised to move forward ahead as we move forward and see higher levels from the current levels as well. Let's pull up all the indices and the closing levels of the major indices for all our viewers to see how the markets really shut shop in this entire week. Let's look at the Sensex and the Nifty first, over 2.2% of an up move for both these major indices. The outperformance was clearly coming in from the broader markets. Look at the Nifty Mid Cap Index at 3.4% uptick this week. The small cap index also by 3.7% odd as well. Apart from this, the Nifty Next 50 also moved higher by 1.8%. So, lovely, clearly the outperformance this time around coming in from the broader markets. What's your outlook on the broader markets, and is it, does it make sense for investors to, go big in this space after this kind of volatile moves that we have seen in some of the previous weeks?
Right. I won't call it to go for a big move, because
Okay.
what we are seeing right now, Sakshi, is exhaustion of momentum, exhaustion of
Hmm.
breadth right now. So
Right.
I wouldn't suggest to go full in. Rather, it is time to be a bit cautious, identify some of the winners, identify some of the outperformers that are coming out of some long consolidation. So, for example, we have seen energy, metal, and other indices run. But if you look at, I want to point out that CNX Auto, which has been in consolidation since February of this early year, in a consolidation, it is coming out of a very long range consolidation, and with
Yeah.
recent, neutral stance by the RBI, I think this particular sector is poised for another leg up. Apart from that, we are seeing some very good buying in CNX PSC sector,
Hmm.
stocks like SBI, Canara Bank, Bank of Baroda. These stocks are seeing some good traction. So I think the money is flowing into this space for now, while other sectors which have already seen a good run up, I think they might be under consolidation. But these are the two sectors which I'm focusing in short term.
Okay, understood that. Let's also look at the sectoral moves this week to see which were the sectors that really supported the market momentum and the benchmark indices. So, top of the charts is clearly the auto index. And you can actually see 4.5% of an up move after a long haul of underperformance for this sector as well, clearly emerging as one of the winners. Apart from that, the IT space, look at that one as well. 4.6% uptick. Of course, this IT space has been an outperformer in the entire pandemic for the markets, and just right ahead of the earnings season, you can actually see some more momentum coming in here. Followed by the energy space, of course, on the back of the rise in crude oil prices and the energy shortage, the coal price shortage as well. All of those factors are supporting the energy index too. The Nifty Bank inched higher, as well as the metal space, or you can talk about the realty space as well, which moved up by 3%. But slight losses were actually seen in the FMCG pack and in the pharma index through this week, which fell about 1% odd or so. Lovely, your thoughts on the earnings, and any counter that you are really keeping an eye out on. Of course, we are awaiting TCS earnings, and then after that, we'll be seeing a whole lot of other IT names coming out with their results too.
Yes, I believe that earnings are starting and TCS will come out, and that will give us some guidance, especially for the IT space down the line. So I think volatility is one thing which needs to be keep tapped on. We might see some vol crush after the announcement, but till the time, I think volatility is one thing that will be hurting this space. There
Okay.
are two particular stocks which I'm keeping a tab on at this point in time, and one of them is IndiaMart, which is another e-commerce space and is coming out of a very good consolidation. I think it's one of the opportunity where we can get at better levels of around 8800 to 8700. I think this stock is particularly poised for a higher level of around 9700 going forward. On the downside, I believe the stop loss can be placed at 8390, 8380 levels.
Okay, so India Mart right there as a stock recommendation by Lovelish right here, which can clock in some considerable upside from the current levels. Which is the other stock that you're keeping on your radar, Lovelish?
Right. The other stock I'm keeping on the radar is Bank of Baroda. This one belongs to PSE space or PSU banks space. You can say it is coming around 88 levels, 88.1 levels. I would suggest investor trader to find a range of around 87 to 88. Go long in it. Keep a target of around 9700 to 106 in the short term. On the downside, you can keep a stop loss at around 83.5.
Okay, understood that. Thank you so much, Lovelish, for being with us and sharing your insights on the markets and these specific stock recommendations for all our viewers as we move ahead into the next week, which is going to be an earnings heavy week as well. Thank you so much. Always a pleasure
Thank
having
you.
you with us. Thank you.
Thank you,
Let's
Sakshi.
Let's now wind up our market show. In fact, you've understood that the markets have had a good run so far this week, and the next week also is going to be highly dependent on the kind of triggers that we get out from the earnings season, especially the IT names, which there is an expectation of that the companies will be reporting good set of numbers, setting the tone for the entire earnings season, which may be quite positive, especially when we have come out of the second wave and the impact of the prolonged lockdown that we had seen post the second wave as well. Thank you very much for joining us for the show. But do stay tuned on to Money9 for a lot more on markets and personal finance. And for that, you need to subscribe to our YouTube channel and also stay with us via our social media handles and visit our website money9.com. Thanks a lot for tuning in.